Welcome back. I'm Pratap here. Today is the 9th January 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. The cost of the training is over 8,000 US dollars, but it is a complete free training. All training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training videos. Just click on the link. Now we are into the supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 7 high liquidity zones from daily and 75 minutes time frame. And the first one is Sona Comps, that is Sona Forgings. And this is a 75 minutes high liquidity zone identified by our software. But more interestingly, we discussed this stock in lesson 28. This stock is having a pierced daily zone, pierced daily demand zone. Let's go to the daily demand zone first. And recent time we also got a good number of trades inside this zone, because you learned 3 techniques for the pierced zone, 3 strategies you have learned in lesson 28. And one of the techniques, the third technique I explained is new order flows inside the zone. Another technique you have learned, either a trap or lower time frame zone as an horizon. This 75 minute zone, our software identified is the horizon for this daily zone. See, this is the daily zone. Rally, 2 base candles and a rally. And look at the distal line of this daily zone. This is the daily zone. This is the distal line. At this distal line, a 75 minute zone is overlapped. Narrowly it overlapped. A little above the distal line, this 75 minutes zone prices are spread into this zone. So that's why this 75 minute zone is as per our lesson 22 concept. Lesson 22, you learned a new strategy. Lower time frame zone as an horizon to the higher time frame zone. And that lower time frame zone will be having a very strong institutional order flows. And these order flows are holding this. The lower 75 minute zone order flows are holding this, holding the prices even though the daily zone is pierced. Look into this. There is a fine-tuned 5 minute zone. From there the prices moved up. And this fine-tuned 5 minute zone is given several trades. Even here again it gave another trade. Not only that, the second trade, it created a drop base rally. During this process, institutions created a new order flows inside the pierced daily zone. Recent time we took these we got the trades from these order flows. From this drop base rally, we got trades earlier in the HLQ analysis. And in the very recent time, all those order flows are consumed. And today again, prices took the trade from this, the 5 minute zone. Today we got a trade from that 5 minute zone. See here. From this 5-minute zone, we got the trade again today. Maybe the prices may go up further. This time again, new order flows institutions may create inside this daily zone, PR's daily zone. Or maybe tomorrow this zone, entire lower time frame zone might be violated. That also can happen. Anything possible. We can't rule out the options. But today we got the trade. This 75-minute zone is an RE zone, but our software identified this as a high liquidity zone. But when I combined our lesson 28 concept and high liquidity zone concept, finally this 75 minutes high liquidity zone is the reason behind holding the prices when the daily zone is pierced. Actually, this 75 minutes zone made the daily zone as a pierced zone. Otherwise, it would have been violated. Why the daily zone is not violated? Because the 75-minute zone order flows, each time they are pushing the prices inside the zone, including today. But today's situation is different, it seems. Yes, today finally daily zone is violated. See, the daily candle closed outside the daily zone. See, this black color line is the distal line of the daily zone. And today completely the daily zone is gone. Now we can't use this daily zone as a pierced zone anymore. Today it gave an intraday trade. But finally, this daily zone is gone because the entire daily candle is closed this time outside the zone. If it is closed inside, it is a pierced. But we got the intraday trade. Still, the 75-minute zone is valid. Why still it is valid? Because that is a high liquidity zone, 75-minute zone. Okay, now let's go to our high liquidity zone and look for the trades as per our high liquidity zone strategy as you learned in lesson 20. Lesson 20, the third video I have explained, high liquidity zone strategy. So let's go to the 75 minutes time frame because this zone is a 75-minute zone. Now I am deleting the daily zone also. It is no more applicable because today's candle is completely closed outside this zone. So no more daily zone is valid. Now this is a rally base rally. Our software identified this zone. Hidden body, the moment you add the hidden body, it is a rally candle. A rally, 4 base candles and a rally. Of course, this is a medium size leg, also part of the base. You already learned medium size leg candle can be part of the base. Earlier candle is a base candle. Okay, now this 75 minutes high liquidity zone we fine tuned with 15 minutes time frame. Here we have a rally, base, rally. This is the 15-minute zone. Now within the 15 we have fine-tuned 5-minute zone is there. The 15-minute zone is a high liquidity zone. Please don't forget, the 15-minute zone is a high liquidity zone. Rally, base, rally. See, prices entered, moved up, again entered into the zone, moved up, again entered into the zone, moved up. And recent time also multiple times. Again entered into the 15-minute zone, prices were moved up. Again, once again, prices moved into this 15-minute zone, again prices moved up. And today also, prices entered into the zone and moving up, but end of the day is completed. Let's we see whether further it will come out of the 15. Anyway, prices came out of the 15-minute zone. See, this is the 15-minute zone. But currently closed inside the 75-minute zone. But completely came out of 15-minute zone. Because 15-minute zone is testing multiple times, the fine-tuned 5-minute zone is also getting tested several times. Let us look into that. Let's go to the 5 minutes time frame. Why this zone worked very effectively? There are multiple reasons. One, it is a fine-tuned zone and also a high liquidity zone, and till today, and this zone is acting as a lower time frame zone, as an horizon to the higher time frame zone, the daily zone. So this is the origin, this order flow. So here we have, I consider this is a failed ERC candle as a lagging candle, and this is the actual institutional order flow, base and rally candle. So rally, base, rally, it is like. See, prices entered into the zone. Multiple times it is holding, and then it pushed the prices up. First, even before that, prices here came very close. When they come very close, it is almost like a testing only. Moved up and again, second time, multiple times it is tested and again moved up. And here again prices came, further moved up because they came very close to the digital line. Can we say it can't be traded next time? No, this is a high liquidity zone. High liquidity zone, what will happen? Institutions will keep on adding new order flows into this zone until the zone is violated. One day it will get expiry period. That day it will be violated. Whether prices are just picked up the orders from the beginning of the zone and moved up, or came very close to the digital line and again moved, it doesn't make any difference. But zone is not violated. If it is a fine-tuned zone, normal fine-tuned zone, prices came very close to the digital line, we never plan to take a trade in this zone. But this is high liquidity. Already tested several times. This is the fourth time or fifth time. Prices came into this zone. Next time also prices came into almost close to the zone. They came almost close. And today, once again prices entered into the zone and further moved up. But we took a deep entry because of getting RR as well as risk management, both the point of view. To get minimum 1:3 RR at least, because this 15 minutes target zone. So this is the one I am using. Drop base, drop with small pro gap is there here. And until this area to get the RR, 1:3 RR, we have 1:3 RR is there until slightly we took a trade inside the zone, somewhere in the middle of the zone I can say. The moment I adjusted the entry, you already know these techniques. I explained in the previous earlier HLQ analysis videos. You can refer them in our important strategies and playlist. Important strategies and analysis playlist is there. In that playlist, I added all those videos. How to adjust the entry, how to fine tune the entry. I think that heading will be there in the thumbnail. How to fine tune the entry. So when you refer that video, you will understand how I explained the techniques, how we can fine tune the entry when the risk is high. Rather than taking exactly at the proximal line or type 2 proximal line, you take the trade a little inside until you get minimum 1:3 RR. That kind of adjustment you have to do when you don't have the RR. But the disadvantage with this technique is sometimes you will be missing the trades. The trade may not reach this level. A little before again it will start moving up. At the time you will be missing the trade. But anyway, if RR is not there, you won't take the trade. That way also you will be missing. After adjustment, if prices entered, it is a lucky trade. Otherwise, you would have ignored the trade, right? So that's why you have to adjust when RR is not enough. That way you will be able to achieve the RR. See, the moment I kept my entry at this level, I got 1:3 RR. And inside further a little more it went and then started sharply moving up and finally reached the 15 minutes target. So this is how you can manage your trades. Okay, how much profit it has given? The Sonacoms, that is nothing but Sona Forgings, has given 4,688 rupees profit, which is 5.1% ROI. Why? Because the futures margin cost is around 80,000, or I mean around 86 or 87,000 rupees. That's why even the profit is small, still you got big RR. If you have 2 lakhs capital, maybe you would have purchased 2 lots. With 2 lots, you would have got over 9,000 rupees profit. Of course, still RR will be 5.1 only, because you brought 2 lots. So we are calculating for a single lot. Margin cost, what is the RR we are calculating? 5 point is very good, because our average is 6. We are little less than 1% less than our average, but intraday point of view, 5.5, even 4% RR is a very huge RR intraday point of view. But we are getting such huge RRs because of high liquidity zones. Normal zones won't push the prices that much. The normal demand and supply zones, mostly people happy by getting 1% or 1.5% profits. They feel that is a very great profit. But HLQ zones point of view, 5% ROI, we are still saying, okay, it is less than our average ROI 6%. Because we are comparing our fast data with our fast data. Sometimes we get less than 6, sometimes we get more than 6. See, this is 7.4, 9.9 RR. Some days we will get that much. That is the power of high liquidity zones. The biggest advantage of high liquidity zone is number one factor, it is a highly successful, almost 80%, more than 80% success rate, not almost, more than 80% success rate we have. And the second advantage, every time it gives huge return. If at all any disadvantage with this strategy is limited to intraday trading only. That is the only disadvantage in this strategy. But still high liquidity zones work. Short-term trading, swing trading, their success rate is much better compared to the others. But short-term trading or swing trading, you can't expect 80% success rate. That is the only difference. Still the percentage is better than the normal, the other demand and supply zone trades you use for bullish or bearish trade setups. In bullish and bearish trade setup, that zone is a high liquidity zone. Still you get good profits. Still its success rate is better, but not up to 80% what we are claiming for this HLQ zone strategy. This HLQ zone strategy is limited to only intraday. That is what you have to understand. But with this strategy, the advantage is majority of the times, more than 90% scenarios, our target reaches up to 15 minutes target. That's why we are getting more profits. Rarely we see not able to reach up to 15 minutes target. But at the time we look for minimum 1:3 RR to get success. In the scenario, many times we will be getting 3%, 4% or 5% ROIs, even though they fail to reach. By achieving 1:3 RR, we have seen many trades 3.5% or 4.5 or up to 5% by achieving 1:3 RR. But anyway, we are just summarizing the concepts. You are all aware, but time to time I have to make you remember all these concepts. Otherwise you should not feel HLQ zones are normal trades. These are the special trades. For all intraday traders, they must use this strategy to get huge profits. Okay, that's why Sonacoms has given 5.1% ROI as per one futures margin cost. Next one is Cipla. Cipla is also a 75 minutes high liquidity zone. So this is a rally, 3 base candles and a rally. Rally, base, rally we have. This is what identified as a high liquidity zone by our software. And this 75 minute zone I am fine tuning with 15 minutes time frame. Here you have a 15 minute zone, a failed ERC candle. You can consider this as a rally candle, two base candles and a rally candle. Rally base rally, a fine tuned 15 minute zone. Within this fine tuned 15 minute zone, are we seeing any 5 minute zone here? No. But how we got the trade? That I will explain. Go to the 5 minutes time frame. Is there any proper 15 minute structure here? No. When you don't have a 15 minutes, there is a rally base rally is there, but that is outside the 15 minute zone. But we are looking inside this 15 minute zone. Inside 15 minute zone, the candle structure is not good. Mostly such kind of zones will be violated unless, I am repeat again, unless institutions create a new order flow inside this area. That is what happened after this zone creation. Institutions created a new 5 minute zone, and in that 5 minute zone we got a trade today. That was a fresh, that is a, until before today, that is a fresh zone, the 5 minute zone. So where is that fresh 5 minute zone? When institutions created it? Let us look into that. So here, this is when? On the 6th January, Monday, the last Monday, prices entered into the zone, and here institutions created a drop, base, rally and follow through candles, a very big push. This is indicating this zone is a very strong order. Of course, you can add like this zone. But why I am not keeping the zone like up to type 1? Because risk management. See, the moment you keep drop base rally, risk will be reduced, but there are higher chances some of the trades might be missing. That's why what you do, generally you keep entry buffer. Entry buffer up maximum up to 0.1% you can keep. See, most of the times we keep 0.05% or 0.06%, 0.7%. That's depending on your overall risk management. After adding the entry buffer, the overall risk also will increase, right? Including stop buffers. Is it within manageable of your 2% maximum risk management? All these calculations you have to do. You will be doing that. So that's why based on that you will be keeping your entry buffer. Because the risk is very reduced because of this drop base rally type 2 proximal, the risk become very small. So definitely add some buffer. There is nothing harm. So exactly, see here today, prices came very near to the zone by adding a small, by adding a small entry buffer, your trade would have been executed today. And here you have a 15 minutes target. Go to the 15 minute zone. Here you have a 15 minutes target. You have a lagging failed ERC base and again failed ERC candle as a drop. Definitely this is a drop candle, large candle and enough body to consider, and the whole body is out of the zone. Even partly inside, partly outside is also okay, but completely it is coming out of the zone. So it is a leg out candle, and exactly this is the one. See today, all these candles it is holding the prices. It's having this area is having a strong institutional order flow. And when you got the trade today, morning 10 o'clock. If in case at 10 o'clock candle, if you would have missed, you got another opportunity at 10:30 candle. After that, sharply prices moved and finally reached the target at 11:30. So within 1.5 hours, trade is completed. If you take a trade in this candle, Within 1 hour, your trade would have been completed. Cipla, it's a very good trade. So how much profit it has given? Cipla. Cipla has given 4,468 rupees profit, which is 5.2% ROA, because its margin cost is even lesser than Sonacom's futures margin cost. So this is about Cipla. And next, next one is Axis Bank. Axis Bank is a daily zone. This is a daily high liquidity zone, Axis Bank. Sorry. This is a daily high liquidity zone. We have a rally, base rally. It is also having lower time frame zone horizon. Anyway, today's trade is within this fine-tuned 5-minute zone. The fine-tuned 5-minute zone is working like a high liquidity zone. That we will discuss. Because that already gave multiple trades. And today we get again another trade from the same zone. So rally, we have 2 base candles and a rally candle with pro gap. So our software identified why this is rally at the again hidden body. If you add the hidden body, it is a rally candle, base rally. And this daily zone is fine-tuned with 75 minutes time frame. So in the 75 minutes time frame, so here we have drop candle, 4 base candles and a rally candle. This 75 minute zone. From here to this lower wick, total we have in between drop 1, 2, 3, 4 base candles, rally at the hidden body. If you add the hidden body, this is a rally candle. And within this 75 minute zone, we have 15 minute zone. Fine-tuned 15 minute zone. This is the one rally candle. Leg in, you have 2 base candles and a rally candle. This is the 15 minute zone. Within this 15 minute zone, we have a fine-tuned 5 minute zone. Let me go to the 5 minutes time frame. We are in the 5 minutes time frame now. But see, this is almost, we are very lucky because, sorry, not this one. This is April 24. There is, I think there is a, Sonacom's was last December, last year 2023 December zone. 5 minutes time frame, just a few candles before the data is over in TradingView. We are lucky, we are able to identify that fine-tuned 5 minute zone. That's why we are able to get a good trade in the Sonacom's. But this is in the month of April. Okay, look into this. Inside this 15 minute zone, we have a drop. We have 1, 2, 3, 4 base candles and a rally candle. Maybe you may say this is a medium size candle. Yes, we have a drop, 2 base candles. Maybe if you consider a medium, 2 medium size candles, part of the base, and then rally candle. If earlier base candles are there, that's why these medium size candles we can accept, part of the base. And this is the 5 minute zone. Apart from that, you observe here you have one more drop, base, rally and follow through candle, and after that the zone is tested first time, the zone is tested second time, the zone is tested third time. This time, third time, it picked up the orders from this zone, 5 minute zone, and then entire daily zone was created. So the daily zone. So that's why this 5 minute zone is the origin for this entire daily zone. That's why this 5 minute zone order flows will be very strong. Next time if this high liquidity zone is violated, this 5-minute zone is also a high liquidity because it is a testing several times. See here itself, see, first time picked up the orders, sharply moved, again prices came, sharply it moved. Next time prices are coming near to the zone. Such a strong institutional orders are added into this zone, it seems. Let us see third time when they came. Here. Once again the prices came almost near to the 5-minute zone. See, sharply prices are moved. That is an indication that strong institutional new order flows are added into this area. So definitely keeping an entry buffer is much safer to get the trade. That is what happened. If you would not have kept the entry buffer, you might have missed the trade. And another example is, see here, earlier there is a next time prices before coming to this zone itself, they were started moving up. That means institutions might have keep on adding a new order flows in this area. And this time again prices came very close to the zone. If you would have kept an entry buffer here, small entry buffer, your trade would have been executed. Small enough. If you keep 0.1, maybe prices will go up to here. Even small itself you would have got. Then where is our target? You have a target 15-minute zone. Drop base, drop. But today it failed to reach 15-minute zone. Why? Maybe some lower time frame high liquidity zone might be there that is not letting the prices. But today it reached 1:3 RR. Minimum 1:3 RR achieved. But some 5-minute zone is not, actually it is not 1:3 trade. Up to here you will get almost 1:5 or 1:6 trade you might be getting. See, 1:5.4 trade. But today prices didn't go up to that. After reaching 1:3 RR, somebody is pushing the prices. Who is that somebody? Maybe lower time frame, high liquidity zone might be there. Go to the 5 minutes time frame. See, you have a lower wick, higher wick between, maybe some lower time frame zone might be there. Or here also you can say rally base drop, that is still holding the prices. But if you further go to 1 minute or 3 minutes, you may see some high liquidity zone might be available here. In this area. Maybe this candle as a base candle might be holding the prices. Of course, this looks a bigger candle, but still, you see, maybe 3 minutes you might be having some clarity. Three minutes also not clear because we have drop, 3 base candles and drop. So 1 minute level maybe what we have drawn in 1 minute level at that base candle level. Drop base, drop, maybe that way we have to assume. They are not structures on, see many times 1 minute level structures may not be very, very clear. But this is the one who picked up the orders and then this entire. Now again you see rally base drop is created here from the same area. Maybe this is the high liquidity area. That's why again rally base drop is created. And every time prices are nearing, see rally base drop. Rally base drop. See the behavior of the institutions, how they are doing. And this is the area holding the prices. So definitely somewhere you would have exited. In a practical point of view, somewhere you would have exited. That is one option. Another option, go to the 5 minutes time frame, draw a support line. The conventional technical analysis point of view, somewhere here you draw a support line. See every time prices reaching the support line and sorry, not support line, resistance line. Sorry for my mistake. Resistance line. Resistance will resist the prices to move further beyond the line. So every time prices reaching, pushing the prices. Reaching, pushing the prices. Reaching, pushing the prices. Even the last 10 minutes also reached and pushed. So this is the area we have a strong. Maybe at the blue color line you have to exit. Definitely you may not be knowing. Somewhere here, either in this candle or in this candle, you have to exit. No other option. Because you have to understand this is the area it is holding. But by this time it almost reached 1:3 RR. So that way you might have achieved 1:3 RR. Definitely we say it is a successful trade because minimum 1:3 is achieved. Even if it doesn't achieve 1:3 RR, still you have to exit in this blue color line because that is the area some lower time frame high liquidity zone preventing the prices to move further. So that's why I said we missed 1:3 RR but achieved we missed 15 minutes target but we achieved 1:3 RR. That is what Axis Bank achieved 1:3 RR in daily HLQ zone but failed to reach the 15 minutes target. The good thing is you might have got multiple opportunities to exit the trade at this blue color line because every time prices are getting resistance from that area only and it never led the prices up to this zone. So definitely you would have booked your profit either here or here. Between these time intervals you might have booked. That way you might have got a profit 6,281 rupees which is 5.4% ROI as per one futures margin cost. So these are the three trades we got today. And one zone is violated KEI. This is a 75 minutes demand zone. This zone is violated here. The reason is simple. Here we have a 5 minutes high liquidity zone is there. And 5 minutes high liquidity zone is pierced before today itself. That's why we know that this zone will be violated. Go to the 5 minutes time frame. There is no 15 minutes order flows here. There is no 15 minutes order flow. Recently it was created drop base rally, but there is no fine-tuned zones here. This is the one created recently, the 15 minutes 125 75. Sorry, this is let me give a light color. This is the 15 minute zone, drop base rally. That way you can assume this is the drop candle. This one also holded the prices, drop base rally LOTL zone. Multiple times this is also holded, but unfortunately here there is no 5 minutes order flows inside this zone. There was a 5 minutes order flow rally base rally earlier. See, this is the one supported multiple times. But here when this candle is opened, it opened below this 5 minute zone and started moving up. That's why the 5 minutes order flow is not, even if you consider this is a base candle, rally, base, rally, still this is also pierced here in this candle. That's why this is the area I didn't draw because no 5 minutes order flows here. We know that this will be violated. But after this candle is, after this, also this zone, this 5 minute zone is holding the prices. After this candle violated this zone, still it holded the prices here. That is today. But anyway, our concern is in this 5 minute zone. This 5 minute zone is pierced. It is not violated completely. 5 minute zone. Even it is pierced, you see. In this candle it is pierced. Earlier this zone is tested multiple times. This is a drop base rally. Again institutions created drop base rally LOTL indicating that maybe this is a strong institutional order flow, maybe a high liquidity zone. See, last time prices came they didn't pierce, they went very deep inside and then sharply prices moved. Next time also prices came and again moved up And this time you see slightly the zone is pierced. Slightly, very slightly. What is the low of this zone? Low of this zone is 4237.90 paisa. But the low of this candle 4237.20 paisa. So that means 70 paisa below the zone prices went. But next time again you see institutions in the same area again they created drop base rally, follow through candle. And today what happened again? This is a pierced zone. And again prices pierced this zone further below, moved up today. And once again prices entered into this zone. Once again it moved further up today. You may feel like if I would have taken a trade, I would have got a good profit. You might be thinking like that. But that is not the reality. Once a zone is pierced at 5 minutes time frame, you can't take trades. But you can take a trade as per the pierced zone strategy by going to 1 minute level or 3 minutes level, any zones, and if it is a testing multiple times, that way you can plan the trades. That kind of mechanisms you can apply. But you need experience before you get into that kind of 1 minute level trading, doing the trades. That's why I'm limited to only 5 minutes only. A lot of experience is required when you want to play at 1 minute level. Rather than focusing on this, we can focus on the other HLQ zones that are giving us trades. If no option, yes, you will be chasing this stock. But when you have multiple options, why should we focus the 5 minutes pierced zones? And moreover, if this pierced zone has to be, if any 1 minute order flows, that has to be proved that it is a high liquidity zone. Until it proves, you can't take a trade. Our software, otherwise you should take our software help. But our software, I limited to 5 minutes level only. 1 minute level I am not performing within our software. The reason is it is taking a huge system time. Waiting for hours of time for processing 1 minute data is really not easy. Waiting that much time. So this is the only reason why we know that this zone will be violated, and that is what happened today. But before today violation, some more time the pierced 5 minutes HLQ zone, some more play took place today. 2 times price moved and finally prices gave up and entire zone is violated. Go to the daily candle, price closed outside the zone. So this is no more a pierced zone, completely it is a violated zone. And apart from that, remaining we didn't, one is the PI Industries, this is a 75 minute zone. Prices today did not enter into the fine-tuned zone. This is a 75 minute zone. See here, this is considered as a failed ERC candle. As a leg-in, you have 2 base candles and then a big rally candle. Why this zone is so big? Because it started, opened here and then entire price action took place. That's why the risk within the zone is very, very big. But you can't take trades directly in these zones, right? You have to fine-tune. That's why you learn the techniques like fine-tuning the zones in lesson 16. Now go to the 15 minutes time frame. 15 minutes we have an order flow here. A fresh order flow. We have a drop, base, rally and follow through candles. And this is having a fine. You have so many other order flows, drop, base, rally, they are all gone. At present, this is the only valid order flow inside this zone. Previously, when prices reached, see, all those order flows are gone. Let me draw horizontal line so that you remember. See, above blue color line, all order flows are gone. This drop, base, rally is gone. This drop base rally is gone. So that's why I'm focusing only below this blue color line. Below this blue color line, we have this drop base rally is there. And within this drop based rally, we have a 5-minute zone. Fine-tuned 5-minute zone. I should not say 5-minute zone, I should say fine-tuned 5-minute zone. See, here you have a rally base rally. This is the area we are planning our trade. But anyway, today prices did not enter into that fine-tuned area. So this is today's price action. Sorry, today price did not enter into this zone at all. But actually there is something I missed. We have a failed ERC, drop base rally is there. I think some high liquidity zone is there, 15 minutes high liquidity zone here. We have a drop base rally, 15 minute zone. So it is picking in the orders, again drop base rally created. Again drop base rally is created. Maybe this is a 15 minutes high liquidity zone. Now let me go to the 5 minutes time frame. In the 5 minutes time frame, I have a drop candle. You have 1, 2, 3, 4, 5 base candles and a rally candle. Probably this is the area holding the prices. This is the 5 minutes high liquidity zone. Anyway, today prices did not enter. Fine. Instead of that, I can draw this 5 minute zone. This is the one actually holding. This is the lower time frame zone as an horizon. Further make it. But at present, this is the one holding the prices, this order flow. Let me limit to this. Why I am saying this is the one holding? See, prices came, moved up. Prices came here, moved up. This time came close, but not good enough. And this is LTF area, lower time frame zone as an horizon. Now go to 15 minutes time frame, you will understand. Here. See, this is the base candles. This is a drop, base candle rally. From this candle, first institutions created a very strong order flow in 5 minute zone, and then they created the 15 minute zone. This 15 minute zone took the orders from this 5 minutes area and then started moving up. Maybe I missed it. I missed this in my earlier analysis. This is the one we have to do. If today prices would have entered into this zone, we would have got an opportunity. But when this candle, this is yesterday's candle. Where is today's candle? This is today's morning 9:15. Today price did not enter into the zone at all. Price did not enter. So these are the new order flows and this is the old order flow, this fine-tuned 5 minute zone. That's it. This analysis will be useful to you next time when prices are entering into this zone and when our software identifies the high liquidity zone. This is about PI Industries, and remaining two stocks are daily supply zones. One is Axis Bank is a demand zone, we already discussed. One is AU Bank. I think AU Bank daily zone we have discussed in the earlier. No, this is the one yesterday we got. This rally, 1, 2, 3, 4 base candles and a drop candle. This is a new 75 minutes high liquidity zone. And this area, we have a 75 minute zone. At the hidden body, this is a rally candle. We have two base candles and a drop candle. And then we have a 15 minute zone. We have a drop candle. You have 1, 2, 3, 4 base candles and a drop candle, follow through candles. Then within this 15 minutes, we have 5-minute zone. Here you have drop candle, 2 base candles and then a drop candle. See, it picked up the orders, came down. Again picked up the orders, came down. Maybe this could be a high liquidity zone, this 5-minute zone. I think one more time also it is tested. Yeah, here also. Again it picked up the orders from this zone and again came down. Currently this 5-minute zone is again even. Once again, it came, this is not violated. Came close to the distal line. What is the high of this zone, 5-minute zone? 590 to 60 paisa. And what is the high of this candle? 590 to 55 paisa. So 5 paisa before the distal line. Last time again came down. Now you may ask a question, can we take a trade? We can, because it is a high liquidity zone. If institutions add new strong order flow, next time again, once again it will work. See, we have to accept the fact one day the high liquidity zones has to be, yeah, see here once again it went. Something, did I miss? Yeah. So all of a sudden I missed this candle, sorry. That's it, this is the last one. Once again it may work, or one day it has to be violated. That way it will be violated, anything will happen. But so far this zone is tested several times. AU Bank. And our next one is IndusInd Bank. This is also a daily high liquidity supply zone. Drop, 2 base candles and a drop candle. This is how our software identified. And this one I fine tuned with 75 minutes time frame. In the 75 minute zone, here we have a rally, 2 base candles and a drop. Actually this is not a great leg out, but the actual origin, imbalance started from this candle. That's why I limited up to this. So this is the actual institutional order flow area, the 75 minutes order flow area. Next I went to the 15 minutes time frame. In the 15 minutes, we have a rally, base, a drop and a follow through candle. The 15 minute zone. Within the 15 minute zone, we have a 5-minute zone. Fine tuned 5-minute zone. This is the leg-in candle. Why? Because at the hidden body. If you add the hidden body, this is like a rally candle. You have 1, 2, 3 base candles and a drop candle. So this is the fine-tuned 5-minute zone. That way you can, or you can consider only this candle as a rally, base, drop. Actually I consider like that. This is the rally. I considered maybe it is like a failed. Actually it is not really a failed ERC. But why I consider to minimize the risk? See, we can't take intraday trade this much big zone. Either you can draw, that is okay. This is a rally candle. If you have fear that you may miss the trade. But the problem is, when you consider all these candles, you have to draw up to here. See how risk is getting increased. But it is up to you. See, even though the risk is this much, you can take your trades like here or maybe keep week to week and I can keep here. Either way you can take the trades. So anyway, rally, base, drop I have drawn. But anyway, today prices did not enter into that area. Previously they went, but before that, before reaching, prices sharply came down. That means the order flow in this area is strong, much stronger. So these are the high liquidity zones identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.